Okay. Hi guys, let's continue with our standard AS 28. This should be our last session in accounts in AS 28 impairment. Agenda now is, first let me finish off all the sums that is there in the material. If you have watched the class till now and if you are aware of the theory 1, 2 and little bit over here, you are capable to solve all the sums. But beyond this, we have some theory also, which I will do once the sums are done. Are you following, guys? There is a lot of theory with respect to CGU. We don't have sums, which I will do in the ending. So let me finish off all the sums and let's get some confidence in the standard. Okay, impairment means study math sums are in my control. That is our idea now. So now illustration number 4 of the study mat. All the sums will focus only on one thing. Compute impairment loss, how to account for impairment loss, if there is a reversal, what to do. That's it. All the sums mainly focuses on this. Okay. Illustration 4 in the study mat, for you also 4, everybody 4 guys, whichever book you have, there's no confusion over here. Only practical sums, number will change. Okay. X Limited purchased the property, plant and equipment, PPE, 4 years ago for 150 lakhs and depreciates it at 10% per annum. They purchased when, guys? 4 years back. Depreciation is 10% straight line method. At the end of the 4th year, that means 4 years got over. 4th year, it has revalued the asset to rupees 75 lakhs. Super. And written off the loss on revaluation and has written off the loss on revaluation to the profit and loss account. That means it's a revaluation loss. Let's compute the numbers still here. Okay, let's understand numbers. We are doing illustration number 4. Asset purchase for how much, guys? 150 lakhs. Okay, for 150 it's purchased. Depreciation is on what method? So into 10%. There is no residual value so far. So depreciation will be 15. How many years are over? 4 years are over. So can I do minus depreciation? 15 into 4, shortcut, minus 60. So end of year 4, my carrying value will be 150 minus 60, which is how much, guys? 90. At this point, this 90 was revalued to 75. So if you don't know AS10, don't watch this class itself. Anybody watching live recording, 90 became 75. So I have a loss of 15 and this loss of 15 was debited to the profit and loss account. That means what entry they passed? They passed the P&L account debit to asset for 15 lakhs. This is what has happened in the question till now. Understood? However, on the date of revaluation, the market price is 67.50 lakhs. Okay, that means some market price. And expected disposal cost are 3. He is giving the estimated selling price. Selling price minus cost of disposal. What will be the treatment with respect to impairment loss on the basis that fair value for revaluation purpose is determined by market value, okay, that is the fair value, and value in use estimated at 60. He is basically saying after doing revaluation to 75, check for impairment. So now I am in year 4 end when my carrying value is how much, guys? Carrying value is 75. At this point, I have to do what, guys? Impairment testing. So carrying value minus recoverable value. Correct? What is carrying value? 75. Who computed that? We computed. 90 minus depreciation for 4 years. Is the speed all right? Following, guys. Residual value is the higher of estimated selling price or value in use. Both are almost given in the question. Estimated selling price 67.5 minus 3. Correct? Minus cost of, see the market price is 67.5 and expected disposal cost is 3. So 67.5 minus 3. 64.5 and recoverable value. So the value in use is given at 60. I will take whichever is higher. What is higher here? 64.5. I don't know if the answer is correct, guys. We have to check. So my impairment will be 75 minus 10.5. 10.50. We will check. Come down. First go to the answer. 10.5. Below is working note, guys. How 75 is found, they showed. My impairment loss is 10.5. Are you following? Of course, you have to explain the theory. This formula you convert to English. Impairment loss is not computed as carrying value minus recoverable value. Recoverable value is the higher of value in use or estimated selling price minus cost of disposal. Can you see the same thing over here? Are you understanding? Recoverable value is this. When you write that English, with that English, add the numbers. So examiner will tell, okay, this fellow knows the provision. He didn't mug up the formula. He put the numbers. He got 10.5. Easier. So when it comes to illustrations, the illustrations are very easy, guys. All the sums will revolve around computation of these three things and the adjustments with respect to that. Let's go to the next sum. Illustration 4 is done. Main illustrations, we finished 1 previous class, 2 previous class, 4 now, and illustration 3. Question number is 3 in whatever book you are seeing, because same study mat order. Okay. This sum little more detailed. What can be the complexity, guys? You tell me. The only complexity in this sum can be computation of carrying value. He will tell depreciation, residual value, revaluation, this thing, and he will trouble us. Computation of value in use. Value in use will be present value computation. There he will play with you. Or this disposal. Beyond this, there is not much they can do. Unless it's a CGU. CGU related concepts we are yet to teach. When we go there, we will learn that. Okay. Illustration 3. This I wanted to try. 4 I just did for you to gain the confidence. Okay, you know. G Limited acquired a mission on 1st April 2020. Correct? For 7 crores. An estimated useful life of 7 years. The mission is depreciated on a straight line basis and does not carry residual value. So far, all the sums they didn't have, but if it's there, you know what to do. You know what to do. So 7 crores divided by 7 years, 1 crore depreciation per annum. Clear? Immediately when you read the question, they should strike, okay, this is depreciation. On 1st April 2024, here, sir, this X is irritating me, sir. Why they put X? Why can't they put the number? Study material of ICA cannot keep revising every year and they have to change the number. So if they put like this, you can take it as any value. That's the whole reason. But main exam, no X. You will have the number 2023, 2024. So it becomes much easier to compute. 1st April 2024. Even after 10 years, they will keep same question. That time I will read as 1st April 2034. Are you following, guys? Okay. The carrying value of the mission was reassessed at 5.1. That means after how many years, guys? 2020, 2020 to 2021, 21, 22, 22, 23, 23, 24. After 4 years, the carrying value was reassessed at. What was the book value at that time? Look at this. Okay, you will do that. You will do that. So book value was, you could compute, it will be 3 basically, 4 years depreciation. 3 became 5.1. How, sir? See, asset was 7 minus depreciation for 4 years becomes 3. 3 became 5.1. So you have a revaluation of 2.1 and they are saying this surplus arising out of revaluation has been credited to the revaluation reserve. Nothing complex till here. For the year ended 31st March, full stop. I forgot one full stop is here. Then continue. So if I put timeline, always when you get confused or if you think there is a lot of data, immediately make a timeline. First, I purchased the asset on which day? 1st April 2020 for 7 crores. Then 1st April 2024, book value is 3 crores because my accumulated depreciation is 4. This 3 crores became 5.1. So plus 2.1 is transferred to revaluation reserve. Like this, your mind should frame the numbers when you read the question. For the year ended 31st March 2026, another 2 years got over. Another 2 years got over. Which year? 31st March 26 plus 2 more years. Plus 2 more years. What is happening? Conditions indicating an impairment of the machine existed and the amount recoverable ascertainable only. Now only impairment is being introduced. Till now AS 10. So there is some indicator, which indicator I don't know, doesn't matter, internal, external, and the recoverable amount is 79 lakhs. On which day? 31st March 2026, my recoverable value is 79 lakhs. Are you following up? See, I am already summarizing the question for you. You are required to calculate, now I am not doing it. You are required to calculate the loss on impairment of the machine. On which day? 31st March 2026, and show how this loss will be treated in the books. So again, full stop. GE Limited had followed the policy of writing down the revaluation surplus by the increased charge of depreciation resulting from revaluation. Beautiful point. This point is so important and it depends how well you know AS 10. I am dropping a hint. Beautiful point of accelerated depreciation from AS 10. Increase in depreciation because of revaluation should be in mind. Look at this. They followed the policy of writing down revaluation surplus. There is a little bit of computation that you have to do, but you know the answer. Everybody knows if you know AS 10. We discussed in class also, but otherwise also not that complex. Compute impairment loss, guys. That's it. Are you following, guys? By the time I finished the question, Vignesh got the answer. I don't know if it's correct. So I went offline Vignesh, but online Vignesh also got the answer. Yes, give 1 second, I will write all your answers. I will keep the question so that you can copy or $91 lakhs is one answer. Online Vignesh, what's your answer? 4 crore? 4 crore 31 lakhs. Next, 4 crore 31 lakhs impairment loss. Okay. No, could be. I don't know the answer. We have to check. Anybody else? Fine. Compute recording. If you need more time, hit the pause button, compute and resume. Don't sleep off in that break. Do it, guys. Do it. If you made one mistake, I will be happy. That mistake, I am sure all of you will make. Otherwise, 91 lakhs. Super. Okay. Follow, guys. Since we got the answers, let me discuss. On 31st March 2016, I need 3 items. Carrying value versus recoverable value. Recoverable value is the higher of value in use or estimated selling price. But I don't have to do that because they gave the term recoverable value. So this is not given. Directly they gave 79 lakhs. Are you following? What is carrying value? My asset was 5.1 on 1st April 24. I need to find value on 31st March 26. So I have to provide depreciation for remaining 2 years. Total useful life asset is 7. Overall is 7. So how to find revised depreciation? Look at this. 5.10 on the date of revaluation. Already how many years over? 4. So how many left? 3. So I will depreciate this for 3 years. Per year depreciation is 1.70. But how many years over? Only 2. So I will do 5.1 minus 1.70 into 2 years. Are you understanding the computation, guys? Reducing depreciation for 2 years. Lakshita, getting it? So what is the carrying value? Loudly, guys. 1.70. 1.70 is the carrying value in crores, correct? This is in lakhs. So carrying value 1.7 minus 79 lakhs, difference is 91 lakhs is my loss, impairment loss. If everybody got that, excellent. Let's go check impairment loss 0.91, 91 lakhs. Everybody understanding? I got answer 4.31 crore lakhs. Figure out the mistake that you did. It's okay to make mistakes, but if you learn, it's fine. That's the whole agenda. 91 lakhs. Are you all following, guys? Everybody clear? Loudly, guys. Hello. Perfect. Hold on. I'll take the doubt at the end of the sum. Let me finish the sum. Then I'll take your doubts. Now, you are required to calculate accounting. See, calculate the impairment loss. That is done. Show how this loss is to be treated in the books. That means what entry I have to pass for 91 lakhs. I will write 2 asset. See, 2 asset, 91 loss. What to debit? Net entry. I know impairment loss to asset to P&L, whatever. What to debit? Revaluation. Surplus account. Debit 91 lakhs. Why? Because already we did revaluation and revaluation has a balance of 2.1 crores. Are you following, guys? This is the impairment after a previous revaluation. So I will debit revaluation reserve for 91 lakhs. Are you all following, guys? This is the answer if this last line is not there. You are required to calculate impairment loss on the mission and show how it is to be treated in the books of G Limited. If my question ends here, your answer is correct. Still your answer will be correct, but if you look at this, G Limited had followed the policy of writing down the revaluation surplus by the increased charge on depreciation resulting from the revaluation. This will lead to a change in revaluation because look at this. If that line, see, if this line is not there, guys, sum is over. Sum is over. Revaluation surplus to asset. But what is that line telling? I want you to first understand that line. They are saying revaluation is transferred back to P&L. That means balance in revaluation is not 2.1. It has reduced. Sir, what do you mean by this? Let me explain. Now we are doing a small deviation and again revising a concept from AS10. For those who don't know AS10 or it is part of the whole syllabus also, same concept there for many years. Let me revise quickly for you to get the logic. Okay. An asset of 100 was revalued to 120. So in my balance sheet, asset is 120, revaluation reserve is 20. Assuming depreciation is 10%, straight line method. What is the depreciation before revaluation? 100 into 10. Correct? What is the depreciation after revaluation? 120 into 10%, 12. So, by doing revaluation, I am saving tax. Correct? By doing revaluation, I will save tax. Another technique to save tax. So, but do you think ICA doesn't know this or leave ICA? Income tax department doesn't know this. That's why in math you have to add back additional depreciation on revaluation. But we don't bother about this. Come back here. I am not bothered about tax. I am bothered about two important words always for you. Dash and dash. True and fair value. That is very important. Revaluing asset cannot increase my depreciation and reduce my profit. It's not a true and fair view. So what one accounting treatment AS10 gives is from this 20, whatever is the additional depreciation charged because of revaluation, which is 12 minus 10, the 2, transfer it from revaluation reserve back to my P&L at 2. Do you remember learning this, guys, in AS 10? So now what is the net impact? 10. Here also net impact. But what is the balance in revaluation reserve? 18. Are you following up? In this sum, they are doing that method of transferring balance from revaluation reserve back to the P&L for the higher depreciation charged. Are you following, guys? How to compute this in exam? In simple, 10% is the depreciation of, apply same 10% on revaluation, 2. Are you following, guys? How did you find 2? Either 20 into 10% or 12 minus 10. Both will be same answer. Okay. Now this number I have to compute for our sum. For our sum, what was the depreciation in the initial years? First, when 7 became 4. So depreciation was 1. So before revaluation, before, I'll write short form, right? You guys don't write before and all. Before revaluation, depreciation is 1 crore. Correct? 7 divided by 7. After revaluation, depreciation is 1.7. Correct? After doing revaluation took place when, guys? 24. How many years got over? 2 years. That means for 2 years, I debited, where I should have debited 1 and 1, I debited 1.7, 1.7. So excess debit how much? 0.7, 0.7. So cumulatively, 0.7 excess debit should be transferred back to my P&L, like how we did 2 here. Like how I did 2 here, I will transfer this back. So 0.7 positive, 0.7 positive. This comes from where? Revaluation. So what was the balance of revaluation in the start of the sum? 2.1. So from this 2.1 balance in revaluation, I have transferred back to P&L how much, guys? 0.7, 0.7, 1.4. Of course, you can reduce 1.4, but I am just showing in detail. Minus 0.7 minus 0.7 for the year 2025, 2026, 2 financial year ending. So now what is the balance in revaluation after minus? 0.7 only is there. What is my impairment loss? 91 lakhs. 0.7 means 70 lakhs. So can I pass this entry? No. I can debit revaluation by only how much? 0.7, which is nothing but 70 lakhs. Therefore, balance 21 lakhs will go to my P&L account. Are you following up? Beautiful sum, guys. This one line makes all the difference. Let's go down and check the answer. Look at this. Exactly same answer. Impairment, revaluation 70. Impairment loss debited to P&L 21 lakhs. Same thing is there in tabular format. That's it. Are you understanding, guys? That one line. This one line. Is it a new topic in AS 28, sir? No. It is already there in AS 10. Sir, last time I didn't study. You skipped. Thankfully, it didn't come in exam. That's it. Are you following, guys? Okay. This is the concept. So, this is your answer. This concept, guys, this is AS 10. AS 10 with impairment becomes a very powerful, what to say, type of sums that you can get. This is your answer. Anybody has doubt here? So done with the illustration. Online, yes. After revaluation, how depreciation? Very simple. So Vignesh doubt is, sir, 7 minus 4, it became 3. Then 3 became 5.1. How this depreciation is asking? Revise the carrying value 5.1 divided by revised useful life 3 years, because already 4 years over. This is the revised depreciation of 1.7. That's it. Okay. One second, I will take the doubt in the ending, Vignesh. This everybody understood, guys? Okay. Following, guys. So we are done with the 4 illustrations. Illustration 1, illustration 2, illustration 3, illustration 4. Understood? Clear, guys? Easy now. Easy for me. I did the sum. But this sum, everybody got 91. I am happy with that. I don't expect you to get this 70 because that AS10, I don't know if you remember, but those who got, how many of you got this entry before itself? This 70 and 21, good. Dhaneshwar, Ram, Vignesh, everybody good. That means your concepts in AS10 is good. Otherwise also you have learnt it now. So nothing to worry. Perfect, guys. Let's proceed to next set of sums. I said we are doing sums. Last time we will finish off the balance theory. Okay. So 4 sums are over. MCQ also I will do. Ending. Let's do practical questions. Finish off whatever is balance. 1 is done. 2 is done. Here I want to discuss something important. Previous class we did one thing, but I just need to clarify on the concept. Answer is correct, but explanation I need to give a more clarity explanation. If you remember this sum, this was a sum where carrying value was 0, that negative 70,000, remember, and residual value was, recoverable value was, again value in use was 0, estimated selling prices negative 70, and I told you create provision for 70,000. Answer is correct, but I want to revise my explanation. As per, do you remember this question? If you want, quickly read it once. We did it, everybody remembers, guys. Recording students, pause, read the question. The explanation over here, I need to make a small change, okay. Basically meaning, recoverable value is the higher of both. Higher of 0 and negative 70 is what? So it is 0. 0 minus 0. Impairment losses 0. But so as per AS28, impairment losses 0. But this is still an expense I have to incur a provision. Therefore, as per AS10 and AS29, I have to create a negative 70,000. I have to create a provision. So answer is correct. Yes, I have to create a provision of 70,000. But the reasoning is not AS28. 28 leads with a 0 only. It's AS29 and 10. Are you following, guys? So let's read this for you to get more clarity. Look at this. Thus impairment loss will be calculated at 6 lakh carrying amount minus recoverable amount nil. Therefore, asset is to be fully impaired and impairment loss of 6 lakh has to be recognized as an expense immediately. However, see this, if you don't write off the asset, this, if my carrying value is still there at 6, this is before write off. Not only I am going to do, I am writing off minus 6 lakhs. After write off, what about that extra money? That only they are saying, look at this, recoverable amount is nil, because I am comparing 0 and negative 70. That's why they are saying as per AS28, when amount is estimated for impairment loss is greater than the carrying amount, which it relates, the enterprise should recognize a liability only if it's required by another standard. It's required by AS10. So it's AS28, AS29, AS10 read together. Now you are following up. Clear, guys? I took carrying value as 0, assuming the carrying value is after write off. Write off. Why I am doing write off? Because question is asking you to, asset has to be destroyed as per law. So I am writing off full 6 lakhs. Even if I don't write off, if I still take here as 6 lakhs, still anyway answer, that time impairment loss will become 6 lakhs. How impairment loss is 6 lakhs, sir? This side 6, this side 0, fully write off. Are you getting it? Following, guys? Everybody sure, clear? 100%, hello? Okay. Done. So whatever I explained for that sum earlier, leave it. This is a more better explanation and correct answer. Okay. Answer is correct, but explanation, there I took impairment itself as 70,000. That's not right. I just want to make that small rectification. Come here. Illustration 3 we finished the, 3, 7, 8 over, guys. This one we didn't do. This We finished. Yeah, last two sums. We'll finish the two sums and do MCQ and then some more theory. Question number 4. Fairly simple. Now this is a concept which comes from CGU. Okay. Within CGU, there are multiple sub-assets of. So my concept is asset 1, asset 2, asset 3, asset 4, asset 5 becomes a CGU. Okay. Now, let's say asset 3 there is some damage for which I have to do impairment test for the CGU. But when I did impairment test for the CGU, there was no loss. Then should I impair this? No. Are you following, guys? Are you getting the logic? The indicator led to make me test for CGU, but upon testing for CGU, how to test for CGU? Carrying value of CGU minus recoverable value of CGU. Let's assume carrying value of the whole unit is 700. Recoverable value of the whole unit is 800. Will I do impairment? No. But within the 700, one small machinery has a damage. I will not write off. Because even if a small part is damaged, no problem. Whole unit is fine. Whole unit has a good useful life. Thing is fine. I got fever. I can't write off the whole unit as body saying gone. Fever came, but the whole unit is able to function. So it's fine. So here also same logic. In the classroom, AC is not working for 1 week. I can't impair the AC because the whole unit is anyway functioning. Students are anyway coming to class. Are you following up? In the class, 5 chairs broke. Still class will continue. Revenue will keep coming. The unit will function. Are you following, guys? Dunzo app, one particular code, there's some bug in the, but still app is working. One feature in the app alone, one button alone is not working. Inside settings, change password is not working, but I can still log in using OTP. I will not impair that one thing because the whole unit is able to do what it has to do. Getting the logic? That's the concept of CGU. The minute you start looking at assets as CGU, look at them only as CGU. Following, guys? Okay. So come to question number 4. On those lines, question 4, Good Drugs and Pharma acquired a sachet filling machine on 1st April for 60 lakhs. Sachet filling means what? Small sachet, filling that with machine. Okay. The machine was expected to have a productive life of 6 years. At the end of 2021-2022, the carrying amount was 41 lakhs. They have given the carrying value of the particular mission. A short circuit occurred in this financial year, internal indicator of impairment, but luckily the mission did not get badly damaged. It was still in some working condition. At the end of the year, the mission was expected to fetch 36 lakhs if it's sold in the market. Estimated selling price. The mission by itself is extremely important line. The mission by itself is not capable of generating cash flow. That means it's part of a CGU. However, the smallest group of asset comprising of this mission, CGU, is capable of generating cash flow of rupees 54 crores per annum. Value in use of CGU and has a carrying amount of 3.46 crores. This is for CGU, not for asset. Within this 3.46, one small amount is this 36 and 41, this asset. All such missions put together could fetch a sum of 4.4 crores if disposed. Discuss the applicability of impairment loss. What I should do? I should do the same formula. Impairment loss is equal to carrying value minus recoverable value. But this is for CGU. This is for the whole CGU. Recoverable value, you know the values, guys. We have to add it. Let's fill the values. Is carrying value of CGU given? See the question, tell me how much? 3 point. 46, 3.46. Recoverable amount, have they given estimated selling price? Here 4.4, estimated selling price is 4.44. Have they given value in use? 54 crores per annum for next how many years? 6 years, but how many years are already over? 1st April 2021 during the year, so only 1 year. So I need to do discounting of 54 crores for 5 years. They have not given discounting rate, but whatever it is, can I write as X? You don't compute. Whatever value in use, can I write as X? For example, it can either be more than 4.44 or less than 4.4. If it's more than 4.44, let's say it is 10. Let's say it's less than 4.44, it's 2. I don't care. Still recoverable value will be, if it's less than 4.44, I will take 4.4. If it's more than this, then I will take the, so whatever this value is, will there be impairment? No. Are you following up? Even if it's 0, I will take the higher of 4.4. I don't care what it is, because already one element, one criteria is more than 3.46. So I don't bother. You compute if you want. You write assumption. I am assuming 6 years. I will discount it 10%, 20%. You do whatever you want. It will either be, recoverable value will be more than 4.44 or 4.44. So is there an impairment, guys? No impairment. Therefore, for the CGU, no need to provide for impairment. Now the question is, this mission which is part of the CGU, which is worth 41 lakhs, which is written down to 36. Should I provide for 5 lakhs loss? No. I will not provide for 5 lakhs loss because it's part of the CGU. Are you getting the logic, guys? So look at this question. As per 28 impairment of assets, impairment loss is not to be recognized for a given asset if the CGU is not impaired. That's it. That's my key. In the given question, the cash generating unit is a group of assets which is damaged, which belongs, is not impaired, and the recoverable amount is more than the carrying amount of group of assets. Hence, there is no need to provide impairment loss on the damaged sachet filling machine. Clear? Huh? Easy, guys. Vignesh, understanding. Do you get the logic? Huh? See, for me, CGU only is important, not the unit. Is CGU able to generate cash flow? Is CGU doing well? We have another detailed discussion as to what is carrying value of CGU, what is recoverable value of CGU. That only is final syllabus and inter syllabus for theory. We don't have sums, but I will still teach you because we have a beautiful concept, end of the class. So far you are lucky that all the sums, they are giving the values. You just have to do comparison. Last one sum which is there in the book. Can we close this, guys, so that I can spend the last whatever time left for theory? Okay. Question number 6, additional question number 6 in study mat. It is, I say study mat 11 and 10. 111 means 1 for 10. Okay. Following, guys. See, in this session we are doing totally 10 sums, guys. This is the 10th sum we are doing. 6 extra, 4 there, 10 sums. Practical sums plus main illustrations. A plant was acquired 15 years ago at a cost of 5 crores. Its accumulated depreciation on 31st March is 4.15 crores. Okay. Depreciation estimated for financial year is 25 lakhs. Let's write down, let's find the carrying value, guys. A plant acquired 5 years ago for 5 crores. Accumulated depreciation is 4.15. Depreciation for current year is 25. What is the carrying value, guys? Compute. 5 minus 4.15 minus 0.25. How much? 0.60 in lakhs, or in other words 60 lakhs. Correct? Fine. Estimated selling price on 31st March is 30 lakhs, which is expected to decline by 20% by the end of the next financial year. That means I told you these values will keep changing. So expected to decrease by 20% means how much? 30 lakhs minus 20%. How much, guys? 24. With or without calculator, 24 only you will get. 30 minus 20%. 30 minus 6. Do you need calculator? No. No calculator needed. All recording students who are looking at me, first take the sum. Try to compute. 24 is the answer. Then its value in use has been computed at 35. That is also expected to decrease by 35%. So what is the revised value in use? 35 minus 30%. Use calculator or don't use, your choice, but you can do without also. How much, guys? 24.5. She is getting scared to touch the calculator now. 24.5. So I will just write down the values again. Carrying value minus recoverable amount. Carrying value is 60 lakhs. Recoverable value has two components. Estimated selling price we computed as 24 lakhs. 30 minus 20%. Value in use was computed as 35 minus 30%, which is 24 lakh 50. Whatever you do, this only is the answer. You should do all these things. Each some different method. Now they are asking questions. 3 questions. Quickly give me the answers when you read the question. Assuming the other conditions applicability for impairment of accounting standards are satisfied, everything else satisfied, what should be the carrying amount of this plant at the end of the year? What should be the carrying amount at the end of the year? What should I be the, should I do impairment, guys? Impairment will come or no? Yes. Whichever is higher, 24.5 compare with 60 lakhs. So what's my impairment loss? You have to compute, guys. Impairment loss 35 lakh 50,000. Therefore, what is the revised carrying value after impairment loss? 60 lakhs minus 35 lakh 50. It becomes, of course, see, I am bringing the asset to this value, means this only is carrying value. Correct? See, you can do 60 minus 35.5. How it came? You are reducing this. That is the revised carrying value. Are you following up? Getting it, guys? You can cross check, but it should be same. Okay. So look at the answers. They are asking carrying value after impairment. How much, guys? 24.5. We also got 24.5. What is the impairment loss? 35.5. Here we also got 35.5. What is the third question? Come on, guys. Third one, do it. There are 2 more questions. If the plant had been revalued 10 years ago and the current revaluation reserve against this plant is 12 lakhs, how will your answer for above 2 questions be? If I revalued, how will your answer for above 2 questions be? And next, fourth one, if value in use is 0 and enterprise was required to incur a cost of 2 lakhs to dispose the plant, how would your answer for above 1 and 2 be? Can you try these 2, guys? Some computation, try. Loss you are splitting, okay. Recording can pause and try it. Others keep trying it, guys. Try question 3 and 4. Recording, if you are just looking at me do the sums, then there is no point of you attending the class. That is third. Okay. Okay, fine. Let me answer third question, guys. If I have a revaluation balance of how much? 12 lakhs. Impairment loss of 35 lakh 50. How you will account with that? How you will account? This 35 lakh 50,000 will be split into 2. 12 lakhs is debited to my revaluation. 13 lakh is debited to my P&L. Sorry, 23 lakh 50 is debited to my P&L. Correct? Let me go check the answer. Yes, 12 lakhs debit to revaluation, 23.5 debit to P&L. Guys, same question, different numbers. He's asking change. Are you getting it, guys? Okay. Now, what if the value in use is 0? The last part of question, where is that now? Value in use is 0 and they want to incur 2 lakhs to dispose of the plant. That means recoverable amount. Now again, let's redo the whole sum. Carrying value 60 lakhs. So I will do carrying value 60 lakhs versus recoverable amount. Recoverable amount is the higher of value in use, which is 0, or cost of estimated selling price. Estimated selling price is 0 minus 2 lakhs negative 2, whichever is higher. What is higher? 0. So impairment is how much? Recoverable value is 0, carrying value is 60 lakhs. So impairment loss is full 60. Full 60. Are you getting it, guys? Full 60 lakhs. So if you come here, third case, look at this. Amount to be written off 60 lakhs minus nil, full 60 lakhs I will write off. Are you getting the logic, guys? I am comparing a 0 with a negative. Additionally, what you can write, this cost of disposal, how much? You can create a provision as per AS 29 and AS 10. Are you following now, guys? That one small question is part of this over here. How many of you understood? Everybody? Perfect. Online, anybody has a doubt? Please put in the chat, guys. I'm right here. Put it in the chat. I'm seeing the chart full time. So far, yeah. Done. Yes, Kalyan, have a doubt? Oh, Dhaneshwar, yes. Not this question. Oh, fourth question, value in use is 0, okay. No, this is separate, no. If incur a cost of 2 lakhs to dispose the plant, what would be your thing? Estimated selling price? No. Okay, response to question 1 and 2, but not the paragraph, no. See, estimated selling price is for the base para. Here, I will not take it here. Look at this. What would be your answer if entity will incur a cost of 2 lakhs to dispose of the plant? Fourth case, value in use is 0, net selling price. We are taking it as, I understood your point. His doubt is, can I take estimated selling price as 24 minus 2 and take 22? Question is not clear. In that case, if you take 22, 60 minus 22, it will be 38. But the more reasonable assumption is to take it as 0 only. Following clear? So with this, we have solved all the illustrations in the new syllabus, new topic. What is these 10 questions? Are you following, guys? Now we have some theory that we have to do. Don't take it lightly. Okay, sir, finished all sums. Topic is over. No. One very important concept is pending. Extremely important concept. Okay. You will be reading from study mat. I will run through study mat also for everyone's satisfaction. Like as usual, we will run through every point in study mat after we do MCQ. We have only MCQs left. Correct? I will come and read study mat and ending as usual. We finished this. So let's do a quick recap once. We're going to close the standard in next 30 minutes. Standard will come to end. That's it. Quick recap guys. Impairment loss is carrying value minus recoverable amount. You know what's carrying amount. You know what is recoverable amount. Not applicable. We saw that. When to test for impairment, internal and external. Okay. Then another small note. I already told you. If an indicator is triggered, then the remaining useful life, everything you will test. When I start testing for impairment, I will also test if depreciation is same, useful life is gone for a change, everything I have to check. That is normal. When you check for impairment, even check for revised useful life, check for revised, all those things I will check. That is basic, even if impairment loss is not there. Then we came and saw some core theory, value in use is cash flows into discount rate. Discount rate, what rate I will take? Specific to asset. If that is not there, WACC. If WACC is not there, weighted average cost of borrowing, that also not there. Other similar borrowing rate. Cash flows, we take the recurring cash flows that we earn minus the necessary expense to earn that cash flow. Cab means driver expense, petrol expense, all of that. Finance cost, no. Income tax, no. Then restructuring cost. If there is no commitment, I will not take it. Then capitalized expense, we will not take. Are you able to recollect, guys? Then impairment is done. Value in use computation is for 5 years. If it's foreign currency cash flow, finish everything there. Then convert the present value to Indian rupees. This we saw, and then we came to the core of the standard, heart of the standard, accounting for impairment loss. I gave a simple example. Accounting for impairment loss is for individual asset and for CGU. Now coming to the next set of concepts. Okay. Yeah. Next set of concepts. Impairment loss for a CGU. Okay. Sir, you already finished? No, sir. I finished by telling you carrying value minus recoverable value for a CGU. Recoverable value is value in use, estimated selling price. Let's take a simple example. Let's visualize a classroom. Those who are watching a recording, assume you are in a classroom with AC, chairs, bench, camera, computer, projector. This is a CGU, correct? How do I find this for the CGU is the next set of discussion. One by one. How to find value in use for a classroom? Easy. This classroom will be there for next 5 years. In this next 5 years, what is the revenue we will earn with multiple batches? Make a projection. Now there are 50 students, next there will be 100, 150. 5 years, make a reasonable 10% growth and then discount it and find present value. Easier. The whole purpose of going to a CGU method is because it becomes easy to compute value in use. So not a big deal. So here there is not much complication. How to find estimated selling price? Easy. My classroom comprises of AC, then we have projector, then we have this camera, then we have chairs, etc. Individually I will calculate for each asset. Total, it becomes what? Estimated selling price. Are you following, guys? So computation of recoverable value for CGU is not complex. Group of assets. Are you following, guys? How to compute recoverable value for Dunzo? Reliance bought Dunzo. Value in use. Dunzo will generate 500 crores of revenue in next 5 years. Present value. Value in use of the CGU of Dunzo. Correct? How to find estimated selling price? If I sell Dunzo today, will somebody buy? Zomato is saying, I will buy. Give me Dunzo. I will pay 250 crores. That is my estimated selling price. Minus cost of disposal. What is cost of disposal? Some employees I have to give some compensation, all of that. Are you following, guys? This is easy. How to find carrying value of CGU? Sir, same no sir. Classroom comprised of AC, then chairs, camera, then whatever, guys, this PC, all this put together, correct? Now, sir, all this is anyway there in the balance sheet, and all this will have a book value, carrying value, add everything. Can I do that, guys? Yes. But now coming to the logic. Why that is not correct? Why that may not be correct? Okay. Let's take an example of one restaurant in Chennai, SS Hyderabadi Biryani. It's there in Nungambakkam. Everybody is aware. If you have gone or not, doesn't matter. There's one restaurant called SS Hyderabadi Biryani where they have good sales. So that branch is a CGU, correct? SS Hyderabadi Biryani, that branch is a CGU. For that SS Hyderabadi Biryani's branch, when I compare carrying value with recoverable value, or even for Dunzo being that matter, they get value in use, cash flow. SS Hyderabadi Biryani or Dunzo is getting cash flow because of the asset and the brand. and the brand, the intangible asset. Even the estimated selling price. If SS Hyderabadi Biryani says, I want to sell myself, some other company will buy for the brand. Dunzo, if they are selling themselves, Reliance got or somebody got them for the brand. That means this side of my equation, the right hand side of my equation, has some element of intangible value which leads for cash flow. But this side doesn't have that. Are you following? Carrying value is only book value of the assets. So can I say this intangible is nothing but the goodwill of the particular unit of? Are you following, guys? Let me give a simple example. The same example. SS Hyderabadi Biryani is able to generate so much money because of the goodwill it has. If you go there, pay 250 rupees, you get good quantity of biryani and the taste is good, it's fresh, it's hot. So because of that only people are going there. Right next to SS Hyderabadi Biryani, if I open one more, let's say Hyderabadi Biryani, nobody will come. They will try once. But the cash flow value in use is because of goodwill. One of the reasons. So that means goodwill is included in the right hand side, in the residual value, sorry, in the recoverable value. But this side, no goodwill. So I have to add not the book value of goodwill, that goodwill which belongs to this unit, not easy. Goodwill is for the whole entity. So I need to add the goodwill. They will say, for example, you have to add goodwill of not the entity, of the unit. You have to allocate the goodwill for the unit. Are you following, guys? That is one discussion. Second, let's say SS Hyderabadi Biryani is generating money because the service is fast. When you go and take away, I make an order, the admin person will immediately make the bill and give it. Okay. That is happening because why? Somebody from the head office created systems, correct? That means SS Hyderabadi Biryani or Dunzo is able to operate effectively and generate cash flows because somebody in the admin office is monitoring and reviewing the work. That means cash flow is not only because of goodwill, because of some administrative work which led for me to get that money. This side, that admin expense is not added. That means if I take this classroom as we started as CGU, we took only AC, fan, all of that. But outside we have an admin officer. Students joining here depends on what happens in the admin office also. That is not included here. Can you follow, guys? So take all the examples. SS Hyderabadi Biryani on this side, carrying value versus recoverable value. What you recover is not only because of the unit, but because of something called goodwill and also something called other admin assets. We call them as corporate assets which are contributing for that unit, correct? Are you able to follow, guys? But this side, carrying value is only CGU. So you need to either remove goodwill here or add goodwill here, or remove this admin office or add here. We can't remove because cash flow is what is generating. I can't discount that for goodwill. So I have to add goodwill here. That is why when you look at the equation, look at this. What they are saying, carrying value of CGU, the formula, I told the logic all this time. Sir, exam what to remember. Carrying value of CGU includes carrying value of individual assets in the classroom, whatever we have, AC, fan, all of that. In SS Hyderabadi Biryani, the table, kitchen, all of that. Add allocable goodwill that belongs to that unit. SS Hyderabadi Biryani is a big brand. In this branch, which goodwill? How to allocate? Plus allocable corporate assets, admin assets. Are you getting the logic why we are adding up? Because these two are already there in the other side of the equation. In recoverable value, I can only compare apple with apple. I need to make it like terms. It should become comparable. You can't compare yourself with somebody who's 2 years older who's earning 5 lakhs or your age earning 5 lakhs. His route is different. Compare with your people with your peers. Answer is not good, but standard I'm saying here. Compare with like things. So we are adding. Understood? So CGU includes three things, guys. Carrying value of the assets plus allocable goodwill plus allocable corporate assets. We studied it. So this is the last discussion we have over here. Last discussion and how to reverse all of that. Are you all with me, guys? Okay. We will do an example sum from the study mat itself. How do I do it? Follow, guys. This is the complex part. In final we have a lot of sums, but for you guys only theory is there. I will want to do one or two sums also. Listen to this. Till here any doubts in this part CGU discussion? Okay. Now AS26 says, intangible assets says you should not recognize self-generated goodwill. We studied that. So this problem will not come for SS Hyderabadi Biryani or the classroom because all this is self-generated goodwill. It will not come. Are you following, guys? It will not come. So for own brands, this self-generated goodwill will be 0. Will not be there. Then when to do it, sir? Let me take the same example of Reliance taking over Dunzo. Reliance has multiple CGUs. One CGU is Dunzo. Dunzo's amalgamation if you studied, Dunzo's net assets is 200. Reliance purchased Dunzo by paying 350. What is the difference? What is that? Goodwill. What goodwill? Purchase goodwill. If you don't know amalgamation, again you won't understand this. That's why amalgamation finish, then you come to this. I'm sure everybody knows amalgamation to an extent. If not also, nothing to panic. Goodwill is nothing but, sir, I don't know, sir, what is amalgamation. 1 minute, I will finish that concept. Let's say I-20 car, I have an I-20 car which is worth 10 lakhs. If I sell this car, Lakshita wants to buy second hand, she will pay 7 lakhs and buy it. Same I-20 car, Dhoni used. Now he is selling it. You will pay 30 lakhs and buy the Dhoni's I-20 car. You are paying extra 20 lakhs for the goodwill or the brand of Dhoni. Correct? So if this is the book value of assets and you pay something more than that, that excess is for goodwill. That difference only is goodwill. Okay, that's all. Amalgamation not only. Amalgamation you can compute. Purchase consideration computed with, compare with net assets. Difference is goodwill. So come back here. Dunzo's value, book value or net assets is 200. I paid 350. Extra 150 is for goodwill. Now Reliance wants to allocate goodwill to Dunzo. How to allocate? Easy. Because this full 150 is for Dunzo, I will allocate. Are you following? This other goodwill is for other CGUs. So first they are saying, if you are able to directly allocate goodwill, allocate. Classroom. Sir, we have only one classroom, sir, here. Only one admin office. In admin office, only one AC. That AC belongs to which class? This class. So directly add it. Are you following, guys? So what the standard says for allocation of goodwill or allocation of corporate assets, it says, can you allocate on a reasonable and consistent basis? Yes. Go ahead and allocate, add it. That method is called bottom-up test. They name it as bottom-up test. Sir, I am not understanding. I will give a simple example. When this is not a problem, I am able to allocate means I can easily allocate. Name only is fancy. Tell me an example of one company which purchased multiple brands at once. Okay, I will take Elon Musk purchased Twitter. I am just simplifying the terms for ease of understanding. Elon Musk purchased Twitter. Let's say Twitter is worth 20, he paid 40. He paid double the money. What is the goodwill? 20. So goodwill is 20. But within Twitter, which he renamed as X, now there are multiple CGUs. For example, what are multiple CGUs? Blue tick is one revenue generating CGU. For example, I don't want to go into technicalities and saying, I'm assuming it's an independent asset. Blue tick is one CGU. Then ad revenue is an other CGU. Correct? So Elon Musk now generated a goodwill of 20 for Twitter, which is now renamed as X. I have two CGUs. CGU1, the blue tick revenue. CGU2, ad revenue. Now this goodwill, how to allocate? Previous Dunzo only one. So straight away you added 150 to Dunzo. Correct? Here what to do? Allocate on a reasonable basis. Whatever reasonable. Sir, this is, I feel the fair value, this is 60. Sorry, this is 30. This is 10. That's why I paid 40. Then allocate 3:1. Whatever reasonable basis you feel, allocate, proceed with the sum as usual. That is called bottom up test. From the bottom you are trying to find out. From bottom up test means nothing great, guys. I am trying to go in deep and find out how much goodwill is for this CGU, how much goodwill is for this CGU, going to the bottom of the discussion and understanding the goodwill breakup. Are you understanding? That is called bottom up test. Okay. Scenario where you can't allocate goodwill. Same logic. Goodwill or corporate assets, same logic. What is corporate assets? We have two classrooms. This classroom is a CGU. That next classroom is a CGU. Admin office is not a CGU because admin office is not generating revenue. Class only is generating revenue. And the admin office assets belongs to which CGU? Allocate. Same for goodwill. Are you getting the logic, guys? No, are you understanding why I should allocate? Hello, guys. See, we don't have a sum in book. We have theory. We have an example illustration in book which I am going to do. But I need you to first understand the whole concept. CA final impairment is this. But you have it in study mat, so I can't tell you, leave it. It's in study mat, so we have to learn in detail. Okay, I'm not leaving even one line. We're doing it fully. So did you understand why to allocate goodwill? Did you understand why to allocate corporate assets? So if I can allocate, it's very easy. Let's take an example to do this well. Let's say I have CGU1, CGU2. This is the last core concept. After that, standard is over. CGU1, 2, 3. Okay, CGU 1, 2, 3, where how to compute carrying value. Carrying value is carrying value of individual assets plus allocated goodwill plus allocable corporate assets. Correct? Carrying value of assets is easy. Let me write down 70, 60, 50 random numbers. Allocated goodwill also, let's say I am able to allocate 20, 10, 15. Allocated corporate assets also, reasonably I am allocating. Let's say we have a bike which is used for, let's say in SS Hyderabadi Biryani, one bike is used for delivery here and there. I am allocating 5 hyphen. In that CGU, bike is of no use. Are you following, guys? Okay. So I will find carrying value of the CGU at 95, 75, 65. Proceed with the sum. This is my carrying value. All the sums this was given. So you are saved. They gave this. We have to compute. This is called bottom up test. Meaning from the bottom, I am trying to add for each CGU the allocation. This is easy, sir. Now I am introducing, we have this in the book. Let's say unallocated goodwill. I am not able to identify this goodwill belongs to which branch. I don't know. I don't know which branch it belongs to. Are you following, guys? Let's take them as 3 CGUs. You take it as 3 restaurant branches or 3 classrooms. Foundation 1 classroom, inter 1, final 1. Are you following? The academy as a whole has a brand, but I don't know to which one to put. I am not able to put it. It's a purchase. I purchased some academy. I don't know where to put this goodwill. So let's say unallocated goodwill is 30. What to do now? This is equal to an exam sum, guys. Unallocated goodwill is 30. What to do? Let's say there is an impairment in inter classroom. Ceiling fell. Impairment in ceiling. So things were going fine. Ceiling fell down in the classroom. So I have to do a impairment test for CGU 2. But for doing impairment test for CGU 2, this goodwill what to do? I can't allocate. So standard is saying compute impairment without allocation. For which CGU? 2. So let me test it, guys. So for CGU 2, I am computing impairment. Comparing carrying value with recoverable value. What is the carrying value? 75. What is the recoverable value? Some number 60. How much? 15 is my impairment. Correct? Now normally what do you do for impairment? P&L account debit to asset 15. Correct? Yes. Now which asset? I have 3 assets. Are you following, guys? See, I am doing this illustration covers everything. Okay. So, everybody understanding till here? Kalyan getting it? So, sir, without goodwill I am computing, sir. Leave it. We will do that later. Without goodwill I am computing. I found impairment loss of 15. Normal sum we did. P&L to asset we did. But now P&L to asset I can't do because there are 3 things. Which one to hit first? Are you following, guys? In asset allocated goodwill I should reduce allocated other assets corporate assets which one? You tell me. I will give a simple example. Let's take a restaurant SS Hyderabadi as example. SS Hyderabadi biryani. Brand is there. Suddenly in news it came. Lizard found in SS Hyderabadi biryani kitchen. One person put photo. In fact, last time I was taking foundation batch in Mylapore. Foundation students were there. We had 100 student batch. In Mylapore, there was one restaurant. I don't want to name it in recording. There someone said some rata. What is it? Cockroach was found. I thought students won't go. Next day also they are eating there only. Okay. Okay. Fine. Come back like this. Let's say Kalyan loves SS Hyderabadi biryani. Every Sunday he eats there. But he found out one day when he was eating itself from biryani, someone took a lizard. Example, guys. Okay. Now tell me, guys. Impairment. Because the revenue is falling, I did an impairment and then I found out there is a loss of 15. Which will affect first? Will you go to SS Hyderabadi biryani again? No. Why? Why you are not going? Is it because the AC is not working there? Is it because the table broke? Is it because the biryani food taste changed? No, taste is same. But what got affected? What got affected, guys? Goodwill. Because of one bad instance, goodwill got affected. That means, whereas CGU is operating well, because of this goodwill is affected, the standard says it is understood, or they are saying the impairment loss should first hit goodwill. You should first strike off goodwill. In this case, in CGU 2, how much is goodwill? 10. So I will first write off P&L account debit. How much? 15 only. 2 goodwill 10. The standard believes that first you will write off goodwill, because if a CGU is not performing, not getting revenue means not getting cash flows, something is wrong with the CGU as a whole. Goodwill is gone first. Next, second. Balance here more, how much? 5. So I knocked off goodwill for CGU 2. Still I have assets and corporate assets. 60 and 5. How to split this 5? Here I can't differentiate beyond this. So in the ratio of 60 and 5, that carrying value I will split. Are you following, guys? So I will come here. The remaining 5 will be shared between the other assets in ratio of carrying value. Are you following, guys? That's it. Sum is over. No, sir. I understood the whole thing. This is basically accounting for impairment loss of a CGU. Come to our notes. This is there in the book. Look at this. Impairment loss for a CGU. First you learned what is a CGU. Independent assets, add allocable goodwill, add allocable corporate assets. Accounting for reversal of first here. Impairment loss of CGU, orange. First write off with allocable goodwill, I told her. Next, allocate to other assets, including corporate assets, in the ratio of carrying value of other assets and corporate. That means in our question, in a ratio of 60:5. Are you following, guys? Understanding? Clear? Sir, what to do next? Sir, we did the whole sum, but we forgot about this unallocated. That's why I started the discussion. What to do with unallocated? That means you wrote off this 20, this goodwill of 10, but still unallocated goodwill is there. What to do with that? Now standard is saying you finished one round of impairment for CGU2. Do again. Sir, I am not able to allocate, but I want to do again. But what to allocate? Since you are not able to allocate, do for whole company as whole. Add CGU1 plus CGU2 plus CGU3. It becomes a larger CGU. A smaller CGU becomes a larger CU entity as a whole. Now again we will redo it. Redo the whole computation. After, so you are doing impairment test twice. This is called top-down approach. So look at this. This sum is there in study mat also, I will show you. So first we did bottom up. What I did now is bottom up. After allocating goodwill, we apportion, correct? So they are saying cannot be allocated. Then perform both bottom up and top down. Bottom up already finished. Now what is top down? Top down means entity as an overall view. Top, from the top angle you look at the entity. Take the whole entity. Add all the CGUs, carrying value, 95 plus 75 plus 60, correct? 65. How much is coming? 95 plus 75 plus 65. How much? 235. Not correct. Why? You are doing this after doing test 1. That means this is not 75. This is not 75. You reduce by how much? 15. That means I should reduce 15. I'm going to reduce 15. So reduce 15. How much, guys? 2. So I will have 220. But I am doing this test only for the purpose of unallocated goodwill. So add that unallocated goodwill. How much? This is the carrying value of the entity as a whole after bottom up test. Correct? Now do impairment. Let's say compare carrying value 250 versus recoverable value of the whole entity. Whole entity, all 3 CGUs put together. How much is coming? Let's say for example, you get 220. What is the loss? 30. This loss I will go allocate, adjust with, or I will go adjust with what? This 30. So I will believe that the entity's loss is the loss was because of the unallocated goodwill and go right off with that. So if there is unallocated goodwill in question, you have to do both bottom up and top down. Sir, all this okay, sir. For exam, what should I do? Steps. Look at the steps I gave here. Step 1, bottom up test. If there is an unallocated goodwill, bottom up test. Allocate goodwill. Same for corporate assets. Allocate goodwill, corporate assets and compute for impairment of the particular CGU. Then top down test. Compute impairment loss first for the CGU excluding goodwill. What is top down test? The later thing, excluding goodwill or corporate assets, and then compute impairment for the larger CGU entity as a whole including goodwill. And then that loss I will believe that it is for this 30. Are you following up? To my understanding? No. I'll again repeat. Did you understand till this 15? After this 15, what is the revised carrying value of the individual CGUs? 95 remains at 75 minus 15, 60, 65 remains at 65. And there is an unallocated goodwill of 30. So this time standard is saying, because you are not able to allocate this 30, do for the whole entity 95 plus 60 plus 65 plus 30. So you get how much? 250. This is carrying value of all CGUs, the larger CGU. Now you compare with recoverable value of same all CGUs. Let's say this time we'll put 240. How much impairment loss? 10. This 10 is the impairment loss of the entity. Go and reduce this 30. That's it. Are you following, guys? So for example, what I should do? If you can allocate bottom up test, one time impairment circle. If you can't allocate bottom up and top down, 2 times. That's it. Are you following, guys? This we don't have a sum. We have plenty of sums in final, but we have an example in the new syllabus study mat. If I go up, oh, beautiful. So there is one. They have given one example, guys, which I will run through again now. Both bottom up and top down. Example means it's not illustration, but it's there in the book. It's easy. It's very easy. One more revision I will do with the example. Follow. I know end of the time, just 5 minutes. I will close the standard. Standard is getting over 5-10 minutes. Example, at the end of 2020, enterprise M acquired 100% of enterprise Z for 3,000 lakhs, which has a fair value of 1,200, 800 and 400. That means 1,200 plus 800 plus 400 is how much, guys? 2,000. Something worth 2,400. You paid 3,000. So goodwill is 600. Clear? Going to the book. Now they are saying at the end of the year, entity A, we will call it as ABC, is CGU ABC. Okay. Make significant losses. Its recoverable amount estimated to be 1,350. It's given over here. Let me just erase that. Yeah. Recoverable amount is 1,350. Now, scenario A. What is the goodwill, guys? We saw goodwill as 600. And here they gave facts itself. Carrying amounts are detailed below. 1,300. This is after a few years. Are you following, guys? 1,200, 800 goodwill total. He gave this in question. You don't have to worry how it came. That much detail they won't go. If you didn't understand the whole discussion also, understand top down, bottom up. That's it. 2 cases. What is the first case? Goodwill can be allocated on a reasonable basis. What basis? In this ratio. So look at this. In what ratio? 1,300 is to 1,200 is to 800. Pro rata ratio, is that the ratio they are using? Sorry, they are not using this ratio. They are allocating goodwill using this ratio. Which one? Fair value. 1,200, 800 and 400. Is that what they are using? Yes. They are allocating goodwill using fair value, guys. 1,200, 800 and 400. So that is nothing but 1,200 is to 800 is to 400, which is nothing but 50% is to 33 is to 17. This only is here. Correct? Understood that, guys? So I am allocating goodwill. From the carrying value, I am adding goodwill. Look at this. How much will come, guys? 120. If I allocate, it will become 60, 40 and 20. How are you doing it? 120 into 400 divided by that whole thing, 2,400. You will get 20. Are you following, guys? So carrying amount which is given in the question, look at this. This is fair value, guys. This is the fair value. Carrying value is given in the question. Where is it given? This one. This is goodwill. This goodwill is apportioned using fair value. So this is carrying value, add goodwill. This is CGU. CGU carrying value. Are you following up? Are you getting it, guys? This is my carrying amount. This impairment is for which one? Which unit? Unit A. What is the recoverable value of unit A? 1350. What is the carrying value of unit A? 1360. I will compare 1350 with 1360, get an impairment loss of 10. This is bottom up test. Understood? What they are doing? Allocating goodwill comparison. That's it. This anyway you know. Nothing great in that. Are you following? This is the study mat question. Example. Understood, guys? Dinesh, are you following? They allocated and they did. Second case only is the new case where it cannot be allocated. So what I told, if you can't allocate, compute impairment without goodwill. So how to compute impairment without goodwill? What is the carrying value? 1 second. What is the carrying value, guys? 1300. It's given here. Net carrying amount 1300. What is the recoverable value? 1350. It's given there. So come here. I am computing 1300 with recoverable value 1350. I am saying losses 0. This is only for entity A. This is which method? Bottom up. From the bottom I am coming. Now again I should do top down. Top down I should do whole entity as a whole because I am not able to allocate with goodwill, with the unallocated, correct? So you will add A plus B plus C plus goodwill. How much is coming? 34 given question. So I will come here. I will take 3420. Then in the question they will also give you entity's recoverable value is given at 3. They gave it. I didn't read the question, but it's given as how much, guys? 3400. Entity to entity comparison. 3420 to 3400. How much loss? 20. Allocate to entity A. Entity A's goodwill. Are you following up? Are you all understanding, guys? Everybody clear? So once do it for the entity without goodwill, profit or loss. Then do for the whole entity with goodwill. This is bottom up and top down. Are you clear, guys? Not only we have it over here. Everybody clear, guys? Okay. Still there are some concepts in this standard like MCQ and little bit of theory which will take 20 minutes. You decide what you want to do. Next session or stretch for 15-20 minutes and close the standard. Your choice. I know a little. Or do you want to resume? What choice? How many of you? Sir, go 15-20 minutes complete. How many of you? Next session. We just have to do MCQ. No, I don't want it to be heavy. Okay. Or we can do one thing. If you guys can stay after lunch we can finish off today itself. Yes. Some other day. See, I'll give 3 options, sir. Recording students, ignore this, just 2 minutes. Option A, close it. Next session, because recording will anyway have next session. Option B, stretch for another 20 minutes and finish and then go for lunch break, proper solid 45 minutes. Option C, next week. What is B? I forgot. Without lunch, 15-20 minutes, complete it. Sure, okay. So let's, only MCQs left, guys. MCQ and one theory, that's it. I want to know if you're able to solve the MCQ. Recording, no next recording. We are closing in this recording itself. Yeah, only 4-5 MCQs. Okay, before that, now look at this, guys. Now, we still have a concept of reversal of impairment and impairment for discontinuing operations. So I don't actually, what we'll do, let's try MCQs, get some control, then I will do that in a different session. But let's do this. If there is an indication that asset may be impaired, but recoverable amount of the asset is more than the carrying amount, what is the following true? Will I do impairment? No impairment. Search for the option. No further action is required. Go check the answer. B. Wait. What is it? Entity should review. Oh, correct. I didn't read the option. No further action is required for impairment, but entity should review the remaining useful life, scrap value and method of depreciation and amortization purpose as per AS10. That I told you guys, even if impairment loss is not there, you have to check for depreciation, useful life and other things. Where is it there in our book? This note I read, remember, if indicator is triggered, the remaining useful life, depreciation method or residual value has to be reviewed even if no impairment is recognized. This is a lesson that read all the 4 options and don't be in a hurry. So answer is B. Next, in case of goodwill appears in balance sheet, the following is true. Self-generated goodwill or purchased, we don't know. I don't want to assume. We'll read the option. Apply bottom-up test if goodwill cannot be allocated to CGU under review. Apply top-down test if goodwill cannot be allocated. Apply both bottom-up test and top-down test if goodwill cannot be allocated to CGU under review. Apply either. Answer C. Apply both. Goodwill there means apply both. Same for corporate assets. Corporate assets or goodwill, same logic. Okay. Next, same. In case of corporate assets in balance sheet, which of the following is true? Again, I'm going to gamble. Apply both bottom-up and top-down test if corporate assets cannot be allocated to CGU under review. Same. Are you following, guys? For this MCQ only to understand what is bottom-up and top-down, last 40-minute discussion. Are you getting it, guys? Understanding? Okay. In case of reversal of impairment loss, I didn't teach this reversal of impairment fully yet. Which statement is true? See, reversal means whatever you debit earlier, I will reverse. But there's a logic as to how I can reverse goodwill. I'll discuss that, yet to discuss, but let's see. Goodwill written off can never be reversed. Did I tell you that? SS Hyderabadi biryani, lizard fell. You won't eat for 1 month. Then what will happen? You will forget. Then they will put some ad. Then you will go and eat. Correct? So there is a temporary loss, but again it can be reversed. Goodwill written off can be reversed without any conditions to be met. Goodwill written off can be reversed only if certain conditions are met. Goodwill written off can be. Answer C. I didn't teach you yet. Let me show that related point. All MCQs done. So this is a very important difference, guys, which you can mark as important. Ind AS CA final does not allow reversal of goodwill. Once impairment is done, impairment is done. You can't reverse goodwill, but we don't have that logic. We have another logic which says if lizard falls, people forget. So again, goodwill can be rebuilt. So standard says, look at this, AS28 also does not permit the reversal of goodwill, but they allow the reversal of goodwill. One brand is damaged. It takes so long to build it back, but standard is giving an exception which is not practically right, but it's there. Impairment was caused due to a specific external event, lizard, or of an exceptional nature. Not every biryani has lizard. That is not expected to recur. It won't come every time, only once. And subsequent external events have occurred that the reverse effect have occurred. So you have to reverse the effect of that event. What they're trying to say, after lizard fell, they did nice marketing. You forgot about it. They gave 1+1 free offer. You all went and ate it. People forgot about it. So you can reverse that goodwill. Final, not allowed. But I don't care about final. For our exam, can you reverse goodwill, guys? Yes. But that such event which led to a fall is only a temporary event. For example, CSK as a brand has a goodwill because of Dhoni. Someday Dhoni will retire, 1-2 years. Once Dhoni retires, CSK's brand will fall, 100% sure. So they have to impair for goodwill. Is it reversible? No. Dhoni will come back after 5 years until I'm going to play again. Difficult. Not reversible. So that this provision says you can't reverse. Are you getting the difference, guys? Understanding? Okay. So, we are discussing reversal of goodwill. See, all these concepts are there in the book. But were the sums easy? Yes, because sums, they are not testing any of this top down, bottom up. It's theory, so I'm teaching you. So, should I study for exam? Just be aware of the concepts. At least know the individual asset or a core concept. Are you following, guys? Still, we have 3 small concepts left in the standard. Impairment in case of discontinuing operation, linking with AS 24 and 28. How do you account for reversal of impairment for CGU? We did reversal for individual asset. See, this entire discussion, what I did here is accounting for impairment loss. What if this 70 which fell to 65, again 60 becomes 90? Sir, what sir? Just now we finished. This is reversal of impairment loss. Another detailed discussion. We have only theory. I don't want to dump it on your head and make you feel scared. It's an easy concept. How we reverse. What we discussed so far is only impairment. We have to discuss reversal. So what I will do, I don't want to dump too much on you guys because this will again take another 15 minutes discussion, reversal. So we have only 2 concepts left in the standard. How to account for reversal of loss, impairment loss of a CGU. We discussed for individual asset, correct? Individual, you know, take to revaluation, take to P&L because one asset. Here I have multiple assets, what to do? And how to account for impairment loss read along with AS 24 discontinuing operations. For that you should know first what is AS 24. Are you following, guys? Discontinuing operation. The MCQ everything is done and I have to run through the theory in the ICA study mat. What I have to do, I always like doing that. Run through the theory over there and saying, hey, we covered all of this. So these 3 are pending, which is roughly about 20-minute discussion. I don't want to overburden you now. Whatever we have learned today, have you understood, guys? Honestly, guys, mainly focus on those illustrations. Single asset, what is CGU? Bottom up, top down, per se sum is not there. Just know that difference of computation. With that, I will close AS 18 for today. Recording can see one more video of 20 minutes later. That's about it. Thank you, guys. See you all in the next session.